Insolvency Professional Restructuring LLP, jointly with Hyderabad Insolvency Professional Association and Skies and Company Chartered Accountants. I would now like to give a small introduction to our organizers. CS Atul Mehta is a founder partner of Mehta and Mehta with an experience of around 25 years in field of corporate law, capital market, and human resource. Currently, he is a secretary of International Association of Company Secretaries, which comprises of 42 countries as members. He was also elected as a president of ICSI in the year 2015. Next, we have CA K. Kranti Kumar is a president of Hyderabad Insolvency Professional Association. He is a DISA qualified chartered accountant, insolvency professional, and registered valuer of securities and financial assets. He is having a rich experience of around 16 years in forensic audit, internal audit, and statutory audit. He has conducted various forensic audits from Indian Overseas Bank and Axis Bank. Next, we have CA G. Kalpana is a secretary of Hyderabad Insolvency Professional Association. He is a chartered accountant by profession, registered valuer of securities and financial assets, having more than 17 years of experience in taxation, project finance, and merger acquisition. Welcome, Kalpana Ji, CSG Kalpana Ji and CA K. Kranti Kumar Ji. Next, we have CA Sunit Shah, founder partner of Skies and Company Chartered Accountant. He is a DISA qualified chartered accountant, insolvency professional, having experience of around 18 years in practice and expertise in forensic audit. He is also part of the managing committee of Ahmedabad branch of WIRC of ICAI. He has delivered various lectures at educational institutes, including Nirma University. Over to you, CA Sunit Shah, for opening remarks.
Yes, thank you, Rishabh Shah. I welcome you all to this most required session. This was for the last amendment that has come up in June 2022. That was second amendment regulation, and immediately now in September we are having the third amendment regulations. So before June, if we would have seen, or if we were going through the process of CIRP, and now if we are after this Nipun sir's session, we'll see that there are lots of changes that have come up so far as the process is concerned, the resolution plan is concerned, the form G itself is concerned. So that will be a lots of changes. Sir, I welcome you, Nipun sir. It's always a pleasure to hear you and know the intricacies of this amendments even. Last time we had a session about this important judgment, landmark judgment, that is Rainbow Papers. That case itself was from Ahmedabad, and Nipun sir himself is from Ahmedabad. So we have a privilege over this. If we see, sir, now the amendments that Nipun sir will be taking forward will be, today's session will be about, there are few revolutionary changes that has come up which will be in the support of IPs, and few changes are such which will cast a more responsibility on IPs too. So Nipun sir will go in details about all these amendments. Few amendments, if I would like to state, is about the suspended board of directors are now required to provide the information very much well in time. Also, the COC, the Committee of Creditors, is required to provide the information well in time to the insolvency professional. Also, there has been a good news, like a revision of fees that is being done, and that is now prescribed fees for IPs, and also the performance-based incentives that IPs can claim from the insolvency process. Also, the difficult part, or I would say that's a huge responsibility that is cast on the IP, is to write letters to each and every creditors, which was not before this amendment. So writing letters to all the creditors of the corporate debtor, getting that information first of all, and then intimating all the creditors about the initiation of CIRP, and getting all the relevant documents from them will be a difficult task. Also, the entire table 40A, which is about the timelines that have been suggested in the CIRP process, has been amended, and that have been substituted. Sir, I welcome you all the panelists. Mahalingam sir, thank you for accepting our invitation in a very short notice rather. And even Kapadia sir, it would be a pleasure to have you all in the panelists. Over to you, Rishabh bhai, for a quick introduction of all the faculties, the panelists, and then Nipun sir, you can take it forward, sir. Thank you.
Now I will quickly introduce our panelists and eminent speaker. CS Himanshu Kapadia is a practicing company secretary and partner in Mehta and Mehta Insolvency and Restructuring LLP. He is also a member of Indian Council of Arbitration. He has experience of more than 2 decades in practice in area of corporate law and its administration and issues related to corporate governance, mergers, acquisitions, buyback, and private equity. He is also a professional consultant to various central government corporations and public limited companies. Welcome, Himanshu, sir. Next, we have CA Mahalingam Suresh Kumar as our panelist. He is a practicing chartered accountant, insolvency professional, and registered valuer of securities and financial assets. Currently, he is a partner in SPP and Company. His areas of specialization includes FEMA, transfer pricing, international taxation, IBC, and commercial arbitration. He is a regular speaker in various seminars and webinars organized by ICSI, ICAI, and IBBI. And lastly, we have our eminent speaker, Mr. Nipun Singhvi. He is a practicing advocate, a qualified chartered accountant, company secretary, and a forensic IFRS bank auditor. Recently, in his research paper was selected by IIM Ahmedabad on sale of company as a going concern under liquidation, and same was published in Anusandhan by IBBI. He has also awarded by Divya Bhaskar for excellent contribution in RERA. He has delivered more than 1,500 lectures on various laws across 50 cities. He has advised and had 600 plus IBC cases having depth of more than 1 lakh crore. He is financial activist, social activist, and RTA activist. I personally follow Nipun Bhai while he appeared before NCLT Ahmedabad bench. Over to Nipun, sir.
Thank you very much, Rishabh Bhai, and thank you, Sunit Bhai, for inviting us all here. And it's pleasure that my dear friend Suresh ji is also here. And it would be good to learn from Himanshu sir also. The topic, as already Sunit Bhai has said, it's very interesting. And the topic is the amendments. And I will tell you, normally the amendments are like in income tax, we have a budget to budget amendments. But as far as IBC is concerned, we were thinking that there would be some Supreme Court judgment and then amendments would come. Now the regulations have been amended in such a way that there was an amendment, let's say on day 1, then another amendment on day 2, and then another amendment on day 3. So it is a sequitur of amendment even in a week. So I don't know what is the process or thinking behind what these amendments are coming out in piecemeal, because normally the amendment should have been brought either in one go, or probably there is a process of discussion paper wherein a discussion paper is there, comments are invited, and then they are finalized. But here something, I would say some amendments, I am also unable to find the logic. We will all panelists try to find out the logic behind the amendments. And some of the amendments are very welcome, as Sunit Bhai has said, that at least our professionals, the fee part has been clarified. So which was always a bone of contention amongst the professional, that whether this much fee should be payable or not payable. But another point is that on the fee what you are paying, probably you will have to shell out something more to our regulator as regulatory fee. Though we all were aware about the 0.25% which we usually used to give, but now 1% more has to be given. So we will deliberate all this, and I will just share my presentation. I hope it's on screen.
Yes, it's visible.
Yes, visible, sir.
So what I have tried to do, sir, today, I have tried to make each and every clause where the amendment has come my viewpoint, and then I would request my other learned panelists to give their viewpoint. So this is the way we are going to flow. First we are going to take the CIRP amendment. If time permits, we will also go on to the liquidation amendments. So first amendment, as far as CIRP is concerned, and I think this is something which all at least chartered accountant professionals here would be knowing. Like the income tax audit has been somewhere connected to GST audit, and we are now giving all the data of GST also. Similarly, in IBC, what is happening? They have now amended the regulation, and they are saying that when you are filing, you should support it by way of GST returns. So now whenever an operational creditor, along with the application under section 9, will have to furnish copies of relevant extract of Form GSTR1 and Form GSTR3B under GST law. Now, obviously, they have clarified that if the GST is not applicable, let's say the turnover is less, then it is not required. Let's say the services are not covered under GST, then it is not required. And according to my understanding, the logic behind GSTR 1 and 3B is I have seen many companies wherein fake billings were there. And we all know that after GST, there have been numerous investigation pan India, numerous arrests wherein fake billing was rampant. So even if I have not supplied the goods, let's say I am an operational creditor and I have not supplied the goods to the corporate debtor, and I am ready to file IBC and I am able to show debt and default. So this was all accommodation entries, or as we know, these entries was just for the sake of showing turnover. And we have seen such cases in past. So probably learning from that past, they have now made it mandatory that at least this GST returns, which are bare minimum, should be annexed. And I have been arguing this point in some of the cases where I have been appearing for corporate debtors, that if GST returns are not there, then probably an assumption or an interpretation can be taken that the supply of goods or services have not happened. Now, I would request Suresh ji to share his views on this.
See, actually, in this case, they are requesting that the applicant, whoever is the supplier who is filing the petition, to share this particular GSTR1 and GSTR3B. So obviously, in this case, there is going to be a challenge from the corporate debtor side. They would not have accounted this exact purchase on their leg. There is only the sales leg from this side. They would have accounted. So here, if you are not able to produce the GSTR1 thing, so the question of operational creditor, where there is a service or supply of goods or service, which is the essential of operational debtor. So they are trying to satisfy that condition in this GSTR form submission. But at the equivalent time, when the buyer, when he doesn't acknowledge this purchase in his part of the return, then it is going to be a contentious issue between the parties. So it's always a one-sided billing where other side I have not accounted for. That's our expected disputes in the before the adjudicating authority. So that's one view from my side, Nipunji.
Himanshu sir, your views, please.
I agree with Mahalingam sir. Basically, to avoid the fictitious transactions or accommodating transaction, this particular amendment has been brought in, and it's a welcome suggestion. I don't think there should be any issue. This will help for the adjudicating authority also to get the or quickly admit the matter. So because once this is a clear thing, then it will be easy for the adjudicating authority to accept the claim or reject, and then in that case we can save a lot of time. Over to you, sir.
So the next regulation is 2C, wherein they have said that now the information to be supplied along with the application is also PAN and email ID. I suppose this is more of a clarificatory amendment and not much to ponder upon. Another amendment, though I think the interpretation was very clear, but just to align it with section 19, probably they have said that the personnel of the corporate debtor, its promoter or any other person associated with the management of the CD shall provide the information within such time and in such format as sought by IRP or RP, as the case may be. So here I would just share my experience that when we were contesting a section 19 from the side of RP, it was very interesting to see that the promoters were not supplying the data, but when the application was filed and court had informally said them that you cooperate, otherwise you will have to take a strict action, they came out with some 1,500, 2,000 documents and dumped it on in the NCLT and also with the RP. So now this is something good, that now they will have to do it in a prescribed format, whatever is given by the RP. Now this format probably will now become a litigative issue between both of them, because what would be the best format, it would be very difficult to comprehend. But yes, now they are saying that at least a format which is given by the RP, the data should be furnished in that. Suresh ji, any comments, sir?
No, this is more, it's more an explanatory kind of thing only. It has come with respect to the section. The actual challenge is the concerned people, whomever the RP approach, providing the information. So in most of the cases, everybody goes 19 to petition seeking for all this information. Now, there are everywhere in the structured enterprises, this information availability is always a continuous challenge in that matter. So it's more a clarificatory amendment, but again, for the challenge to the insolvency professionals in obtaining this, in my practical experience, whether they give in the format, at least something if they give, I will be able to conceive something out of it and I will prepare the IF. That's what the kind of challenge we have. Now they are mandating it through this. It will be, if the management and all are respecting these directions, and if they do it, it will be much helpful for IPs to prepare the information memorandum and all those other documents. Over to you.
So another important, and this is again very tricky situation wherein there were some data. So first of all, I just read the regulation. The creditor shall provide to IRP or RP, as the case may be, the information in respect of assets and liabilities of the CD from the last valuation report, stock statement, receivable statement, inspection report of property, audit report, stock audit report, title search report, technical officer's report, bank account statement, and such other information which shall assist the IRP or RP in preparing the information memorandum, getting valuation determined, and in conducting the CIRP process. So what they have done is they have now, in a way, though that code of conduct of COC has still not been notified, or still the bankers are, I think, not willing to come under the umbrella of regulator. But in a way, this cast an obligation now on the creditors to give each and every detail which is available with them. So probably what was happening, and I have been facing this litigation in the courts where bank has done their own forensic audit, bank has done their due diligence. Let's say bank has declared somebody as willful defaulter. Sometime bank might have declared the account as fraud on the basis of some transaction audit report conducted. Sometimes they must have done stock audit and they must have seen that the drawing power itself is not coming up to the mark at what was sanctioned. So all these issues were never shared with the IRP or RP because always the bankers used to say this is a confidential thing. Why should we share with you? Now, in a way, they have clarified, and in a way that when the promoters are not cooperating or when the books of accounts are incomplete, at least we used to read that chapter, how to make the books of accounts from incomplete data. So this is something which is that part of incomplete data. Probably this will help the IRP or RP to get the books of accounts updated. But the tricky situation which I think I could share is with regard to valuation report. I have seen cases where the promoters will come to the court and say, see, this is the bank who had valued my property, let's say for 100 rupees. And today when the IP has come and he has appointed IBBI registered valuer, this property's value is only 50 rupees. So now the difference in the valuation report will also become something more to argue, because whatever documents will be given by the creditor will definitely be discussed in the COC. And as we know, after the Vijay Jain judgment, everything will have to be shared with the suspended management. So this thing which I suppose is going to create more controversy and litigation is with regard to valuation report. But in a way, this is very good because a base valuation will automatically come for what bank has given loan. Himanshu ji, your views, sir, on this particular aspect?
I agree with you. There is always difference between whatever valuation submitted or at the time of taking the loan, whatever valuation has come across and at the time of final litigation and the independent valuer. I agree with you. It opener, no doubt it's a welcome suggestion, but it will definitely a matter of contest. Let's see now how the law evolves.
Suresh sir, anything, sir?
See, actually, this particular detailed way of telling the what and all creditor should give, actually, it's a big boon to the RP or IRP for preparing information memorandum. Today, the latest amendment in information memorandum preparation, the kind of information they request for, to what extent the management will cooperate in preparing this information will be a big challenge. Now, the responsibility being cast on the creditors to give all this information. Obviously, the promoters would have given all these things for the purpose of obtaining loan from the bank, right from their project report. All these becomes very easily accessible for the RP to get it. So obviously, his IM preparation work will be much more simplified with the support of all these things. But the biggest challenge for IT in this case is the preferential transaction audits and all those things. I'll tell you, in most of the small account cases, the books of accounts with the promoter will be different, and the financial statement they would have submitted to the bank will be completely different. The stock statement what we use to the bank, the kind of projection statement, and even the rare instances where audited accounts reports given to bank itself is quite different from the original actual books. And now he will be, in some cases, the RP will be having two balance sheets, two stock statements reflecting two different numbers. So which will be the basis for PUFE? Again, that itself becomes a challenge. Okay, that's a criminal offense for on the part of the directors giving such kind of differentiated numbers to different authorities. But now that's a new challenge to the RP, because that becomes an official document available to him for the PUFE transaction. And that's it. Nipunji can.
So another, or I would say corollary to the amendment which they have put it while filing the application, similar amendment they have brought in while filing the claim also. So whenever the claim is filed, again it has to be supported by GST returns. And I think somewhere down the line they are trying to point out that a person who has not complied the GST law will probably have no remedy under IBC law. That is probably the logic of contemplating this. In fact, I would share another example wherein there was some goods supplied as was alleged by the operational creditor against the corporate debtor. And corporate debtor said that such goods were never received by me. So what we did was we filed an application in NCLT asking the court to look into, because there are no GST forms he has proven on record. Secondly, assuming that he has shown this sales, probably he would have paid a hefty amount of income tax also. So court were obviously of that view that why should we ask for GST and income tax? We are not tax authorities. We will only see the invoices. But now I think this has been clarified, because these fake billing companies, which were otherwise using IBC as a route to get an exit, now would stop by these such amendments.
True.
Now another amendment is with regard to valuation, and this is regulation 35. Now post amendment is a very clearly they have said, the amendment says if the two estimates of a value in an asset class are significantly different, or on receipt of a proposal to appoint a third registered valuer. So very interestingly, they say if the two estimates of a value in an asset class are significantly different. Now here they have used the word significantly different and asset class. As we all are aware that asset class under IBC is broadly three categories: land and building, plant and machinery, and security and financial assets. Now, if in any class there is a variation between the two set of valuers, so they have explained what is significantly different. So in the explanation, they say a difference of 25% in liquidation value under an asset class, and the same shall be calculated as L1 minus L2/L1. So L1 is higher value, L2 is lower value. So they have clarified that basically if there is a 25% difference from the higher valuation, then a third valuation should be done. So the law says that if there is a significant difference, the RP may appoint a third registered valuer. Now here the word used is may. Now this is going to be again a very different situation, and I suppose Intas Pharmaceuticals judgment is there of NCLT Mumbai, which was confirmed by NCLAT, wherein the court had said on the allegation of the unsuccessful bidder that the valuation is wrongly done and the valuation should be done by a third valuer. And that third valuer reference was challenged in NCLAT, and NCLAT also confirmed the appointment of third valuer. So probably this is coming from there, that there is, if the reference has to be done to a third valuer, there should be some material on record. And now we have a yardstick of 25%. But the second part, I find it very difficult, because here they say on receipt of a proposal to appoint a third registered valuer from COC. Now, when a COC will say you go for a third valuation, and suppose if we interpret this word as may, wherein RP says no, there is no requirement of third valuation, then what would be the interpretation? So my view is that though this word is may, but it should be read as shall, because once there is a reference by COC, and if RP tries to put his own view, which is probably contradictory, then there would be some difficulty. Suresh sir, please.
Sir, actually in this, the wordings have little bit enlarged and made clarified to the current IPs in practice. Earlier, the wordings when they used opinion, two estimates of a value are significantly different. So they have not said at a total level or at the asset level. Say, for example, when you take plant and machinery valuation, some valuer would have valued a class, a particular set of machinery at a high value and something at a different thing. Whereas the second valuer would have valued in a different pattern. So we always had a confusion between whether we have to compare the significant difference at individual machinery level or whether we have to do it at a total level. So that was a basic confusion IPs had in the past. Now, at least in this, in the starting part of this particular amendment, they said two estimates of a value in an asset class. So there was a better clarity for the IPs now, so that at the total level, so for example, if it's a plant and machinery, total level, what is the significant difference? So we don't want to get into individual asset level. So that kind of clarity this amendment has brought in. So IPs are a little bit liberty to move ahead individually, asset wise, they don't want to see into it. Second point, as Nipunji rightly said, although the word used is may, if the values are significant, it is safe for the IP to go ahead with the third valuer so that he is safe when the litigation arises. But the problem comes up when COC gives a proposal. When now COC gives a proposal, whether with 66% voting or it is just a 1% in the COC is sending a request to appoint a third valuer. See, if it comes with 66% voting, it becomes a responsibility and duty of the RP to do it. Now, because earlier it was a stand that RP is the person deciding on appointment of valuer. Who to appoint is the discretion of RP. But now, if it comes with the 66% voting, it has to be a shall only in this context. That's my view, Nipunji.
Himanshu sir.
I agree with Malingam sir, but here one thing is sure that RP has to continuously, depending on the views and fancies of COC, even if he wished, and he has to request the COC only. And if the COC agrees, then only he will be able to do it. Otherwise, and even if he wished, it has to be. And if the COC won't cooperate, in that case, he has left with no other option but to go to the adjudicating authority and appoint. Of his own, he will not be able to do it. And that is the issue point here. Actually, it should be left to the RP only to decide the matter, and COC should cooperate. But here it is other way around. That's my view, sir.
So we move on to the next clause. So here again, this is in line with what we had read in regulation 4. Here it says that creditor shall provide. So basically, again, creditor are cast a duty to provide the IRP or RP with all these audits. So basically, this is clause 35A. So this is being inserted so as to add everything in the preferential transaction. Now, there was a litigation, I remember, when a promoter went to High Court and said that, see, under preferential transaction, let's say I've got a clean sheet, because we have all those timelines, and sometimes forensic auditor may not be able to come out with the conclusion, or maybe due to absence of documents. But when banks had done their own internal forensic audit as per the RBI circular, and they have come out with some diversion, probably willful defaulter or fraud account must have been declared. Now it was challenged before some courts, and it was said that one report under RBI law and one report under IBC law, they cannot be contradictory. So basically, if the RP wants to use the report given by the bankers, this will help, because transaction auditor ultimately will have some evidence to rely upon and to assume that whether this is a X transaction or Y transaction. Your view, sir? Suresh, sir.
Yeah, actually, in case of stock audit, transaction audit, forensic audit, now, although we may ask the bankers to share it off, stock audit, yes, we know that they have conducted, that will be mandatorily everyone it happens. Transaction and forensic audit, it is bankers can come and say, we don't have a report of that type. It is them, there's no mandatory on them to conduct those things. On a case-to-case basis and a discretionary basis, they conduct it. So there is always a possibility that we are not conducted like that. They can tell a statement. So that possibility is there. Yes, Kapadia sir. Mansu sir.
So the next regulation is with regard to information memorandum. Now it says that RP, the creditors shall provide to the RP latest financial statement and other relevant financial information of the corporate debtor available with them. So as Suresh sir was rightly pointing out, there are twin balance sheets. And sometimes I have seen there are 4 or 5 balance sheets also. For each and every department, they make a different balance sheet. So if I want to get a subsidy, probably my balance sheet will have a good turnover, good revenue. When I have to pay GST, I will have to have a less turnover. When I want to take a loan, it will again higher volume. When I want to take investment, it will be maybe 200 times the volume. So such type of different financial information is there. Now, previously the word used in regulations, which I could point out, is audited financial statement. Now here the word they have changed it to latest financial statement. Now I don't know whether this is intentional or unintentional, because latest financial statement is something tricky. Normally we would rely upon the audited financial statement, and audited financial statements, because they are probably done by an independent auditor and we can lay our hands onto it. But latest financial statement may not be audited one, may be only signed by the promoters, and as we know, there could be some hanky-panky on the side of the promoters. So this is again going to be an onus on the creditors to provide all such data. Suresh sir.
Yeah, but see, the latest financial statement here, actually it is a more sensible document for the RP to work on for the information memorandum. Majority of the cases what we come across during the insolvency process, last 2-3 years, they would not have got it audited, they would not have filed with ROC and all. But however, for the purpose of renewal with the bank or something else, they would have given some provisional statement, partly certified by some CA or something, they used to give it up. Provisional thing or quarterly information statement or the CMA analysis, for some other information they keep updating and giving it up. So the purpose of this amendment is to facilitate the RP with at least the kind of information, whatever they have collected from the corporate data, please share it back to the at least the RP so that he can work on the information memorandum clearly. More is, for example, when you put the information memorandum, business prospects you have to give. So the CD will not share you what kind of business prospect or projection, but whereas those data you would have already submitted as a project report or a CMA analysis report to bankers. So when the bankers share those relevant financial information to the RP can make the information memorandum little bit more informative for any prospective resolution applicant to act upon. So to that extent, it will be of a great help to the RP to prepare the IM.
Himanshu sir, your view, sir.
It's a welcome amendment, but let us see. It looks like both the creditors and debtors, corporate debtor, both will be exposed, because if there is any irregularity on the part of the creditor or some kind of a negligence, it may also expose. So, but for a resolution professional, it's a welcome suggestion, because he will get some kind of a link for preparing the information memorandum and various other information which the corporate debtor would have filed, must have filed to the banker, and not cooperating and parting with the RP.
So Himanshu sir, my query to you is, being a company secretary, what do you think that this particular ROC data vis-a-vis those data which is unaudited, not shared with any of the regulatory authorities, what would be having more weightage?
Naturally, ROC data would be more weightage, but here, say for forensic audit or some kind of regular quarterly stock statements and various other information which corporate debtor must have provided to the bank, and it may not be matching with the the claim or kind of statements submitted to the court, or in which is not in in consonance with the report submitted to ROC, it will be helpful for the RP to find out kind of a transaction and preparing the information memorandum.
In fact, I remember my previous, when I was working as a CA and we used to go for audits and all, when we used to see the stocks and just see the stock statement applied by the promoter, I used to say that, see, in the stock statement, let's say is written 1,000 bags were lying here. And when I am going there, I am seeing hardly this capacity is of 500 bags only. So how this stock audit was done, I don't understand. So such type of the diversion would probably come in when these type of financial information would be cross-checked somewhere.
Exactly.
Now, the another regulation which is providing mandatory contents of the resolution plan, and I think this was very much required because different benches have been taking different view. And after the Delhi High Court judgment in this Venus matters, Venus recruiters, it was a big headache for the RPs or the liquidators after the resolution plan was approved, how to take it forward, or when the liquidation was done and there was no guidance with regard to avoidable transactions. So now they have said that provide for the manner in which proceedings in respect of avoidance transactions, if any, under Chapter 3 or fraudulent or wrongful trading under Chapter 4 of Part 2 of the Code will be pursued after the approval of resolution plan, and the manner in which proceeds, if any, from such proceedings shall be distributed. So they have now clearly said that in the resolution plan, it should be mentioned how the proceedings would be taking place once probably the plan is approved, who would be the beneficiary of these proceedings. Now, I think that this is something which was much needed after the DHFL judgment of NCLAT, and now probably it is going to be finalized by Supreme Court. DHFL judgment in NCLAT was of the view that if there is a transaction application pending and the bidder or the resolution applicant is buying those applications, there should be some benefit assigned to that particular application. In that case, it was rupee 1 nominal value, and somewhat, I think more than 35,000 crore was the worth of those transaction application. So that was the view of NCLAT, that even though you are making beneficiary, but the value assigned is not proper. So now this is a mandation that the resolution plan will have to show who is going to be the beneficiary and how this proceeding will be handled. So there could be situation where the resolution plan is getting approved. Either the application will have to run by the COC or by the COC authorized RP who would become an ex-RP, or in the alternative, it could be a liquidation where the application would be continued by the liquidator. Now, whoever is going to continue, this is very important that the beneficiary should be known and the person who is going to continue, his locus should not be questioned. So these two aspects, I suppose this would be clear from clause D. But the unanswered question today also is whether those application could be sold to the resolution applicant or it could be continued by the COC. That has not been answered, and probably I think that matter they are also waiting for the outcome by the Honorable Supreme Court. Your view, sir, Suresh sir.
Here, okay, when the resolution plan is from a third party, there is somewhat clarity as far as this profit transaction is concerned. Whereas when the resolution plan is from promoter group themselves, who are not disqualified under 29A, MSME, when they come up, this transaction petition becomes a big challenge for the RP. Neither in the plan what they ask for, they are getting a clean cheat or the personal guarantee waiver and all those things from the bankers. So bankers are taking a stand that, sir, anyway we are giving a clean cheat and they are going out with the settlement. We are not intending to continue. On the other hand, obviously this Puga transaction petition is against the promoters. The promoters are not willing to continue that particular case. Then who will stand with that is a big challenge now in this particular case. The plan approval itself will become a big question when the plan is not having a clarity about this whole thing. So whether to sell this particular thing to a third party, this particular transaction alone to a third party, today, okay, now there is a split of resolution plan is permitted. But obviously, there will not be any party to come and buy that part of that loan, the petition alone. This is a challenging scenario for IP where the resolution plans are from the promoter group. Despite the profit transaction petition, addressing that will be a bigger challenge. Otherwise, if it's the third party, yes, this can be addressed it off amicably between the COC and the resolution applicant, who will run and whom the benefits will flow upon.
Himanshu sir, your view, sir.
Yes, sir, I agree with him. And, at least now, even at the first instance, what happens sometimes that resolution professionals are little hesitant to even report to the preferential and other transaction because, the legacy, who will take care about this particular transactions, this kind of litigations after completing his work as a RP. In this is the clarity, and now some kind of because remuneration is also being provided, so it's a welcome suggestion. I feel that it's much needed clarity, but still we have to see how the law evolved in this particular matter.
So here one more thing is there. The proviso clarifies that it will apply only prospectively. It will not apply retrospectively. So they have a cutoff date of 14 June. Now my worry is that even before cutoff, because now all the plans probably which have been reserved are again getting reopened, and we all know the rainbow paper effect. All the plans are now either reopened or they have to be aligned with this particular judgment. So I think this particular aspect will also now require to be clarified. Different benches are taking different views. Some benches are saying you file an additional affidavit to clarify the situation. Some benches say that you take an approval from COC to continue. So we will see what happens with this clause D in coming times.
True.
So now we move to third amendment. So third amendment again in CIRP regulation is with regard to regulation 34B. And I can see smiling face of Suresh ji because it is talking about the Rokda, the fees. And now we have at least a benchmark for fee. So it says that fee of IRP or RP appointed on or after 1st October 22 shall not be less than the fee specified in clause 1 of schedule 2. So here the word used is shall not be less than the fee. So basically this would be in a way mandatory, provided that the applicant or the committee may decide to fix higher amount of fee for the reasons to be recorded. It could be size and scale of business operation. It could be business sector in which corporate debtor operates, level of operating economic activity of the corporate debtor, and complexity related to the process. So I think we should deliberate something on this particular aspect of may decide higher fee. So Sureshji, do you think we will get higher fee when there is a may option with the bankers?
Actually, really speaking, if you had seen one thing on a lower end, they have put a threshold of 1 lakh. There's nothing less than 1 lakh. So the stories of people quoting 20,000, 30,000 and all are at least the dignity of the profession is saved now because of this particular amendment. When it comes to get into the slab, they say the 50 crore. When the original draft was coming 50, 100, 250 like that, there were stage-wise things. But now suddenly between 50 and 500 crore, they added a zero, they made a jump significantly without any internal breakouts. So here the requirement of this between the 50 to 500 crore, depending upon the complexity of the case, if it is if it is not a going concern, it may not make a big difference because it's a more of a desktop work for the IP on that matter. But when it is a going concern where the people deployment requirements are high and the day-to-day time involvement of the IP and his peoples are high, certainly he has to have strong negotiation with the COC with background of data, what kind of work involved and the amount of time to be spent, and then he has to demand a fee which is higher than what is minimum prescribed. Minimum prescribed is just saving street level fight between the IPs for taking up the assignment, going forward on a qualitative aspect of running the going concern management and all those things. Yes, he has to negotiate with the COC for a right amount of fee on the higher side. That will happen in going forward in that things.
Sir, will we get higher fee or not, sir? You are
We
not.
will get higher fee, sir. There is certainly higher fee. It's a case to case basis, and it is the ability of the RP to convince the COC. Today, against the competing bids of 20,000, 30,000, we are able to get the premium. We are convincing them about the quality of work and quantum of work involved. Same thing we have to do. At least from the base minimum, we have 1 lakh, 2 lakh, we have to negotiate with them. We don't want to negotiate for the 20, 30 competing cases.
Himanshu sir, your views, sir.
See, there are many IPs who may not agree with this kind of a suggestion, but rather amendment. But according to me, it's a welcome amendment because, as Mahalingam Sahab says, many times it happens that people quote such a minuscule fees. I don't know what is tempting them to accept such kind of assignment. And this will help at least the new IP who is coming in the field. At least they will get something substantial, something reasonably good. Otherwise, it's very difficult for them to survive. So I feel earlier there was some kind of a undercutting kind of a practice. Let me be little can say
Vocal.
vocal. But this is at least reasonable. At least we can demand with the financial creditors, particularly banks. But look, now at least I cannot, if at all you can't pay more, at least this is the fee which I cannot reduce.
Okay, actually here I just wanted to add one point. Now these new amendments, actually the 5 years, last 5 years, the approach of the IBPA and the new chairperson approach have completely taken a U-turn. Really speaking, if you see the past chairperson, he was always carrying a view of let the market decide the fees. IBPA will not determine it up. And he also had a viewpoint that it has to be only individual IPs only are allowed to take up cases. Entity form of practice is not allowed. This is a very strong, clear point he carried for the 5 years of his tenure. Now the new chairperson had a complete U-turn on the matter. We will allow the market to decide, but we will put the minimum benchmark point. And now he is taking another step that entity form of practice. Yesterday's amendment has come in the thing. Entity form of practice is also permitted. So that's really a different perspective and change in IBPA's approach point in this this year with this new chairperson. And okay, we will expect many more such radical changes in the IBPA's approach also in the coming days.
There are questions in chat box. Someone asking that if the COC does not agree with the minimum fees, and what would be the impact if once the resolution plan is approved and COC does not agree for the minimum fees?
Rishabh, I think that will come in the next slide. What period is excluded and what is included. So we can take that query after 2 slides. So the regulation 34B. So first we have discussed about the fixed fee. We will come on to the timings. But regulation 34B is something which is an incentive. And I would say it is a variable component of the fee which we are going to receive. So 34B says for the resolution plan approved by the committee on or after 1st October, the committee may decide in its discretion to pay performance linked incentive fee not exceeding 5 crore rupees in accordance with clause 3 and 4 of schedule 2. We will come on to the schedule, or may extend any other performance linked incentive structure as it deems necessary. The fee under this regulation may be paid from the funds available with the CD, contributed by the applicant or members of the committee, and or raised by way of interim finance, and shall be included in the insolvency resolution process cost. So there are 2 things. One is it cannot exceed 5 crore rupees. Another is this is a performance linked incentive. Normally now the government is also giving the PLI to many of the industries. So it is something on those lines. But here I would like to share. In fact, one of my friend only, he got this show cause notice from the regulator with regard to success fee. Though his matter is still sub judice before Supreme Court, and therefore that matter is still open and not being adjudicated. But the words used by NCLT and NCLAT with respect to 3 crore amount of success fee was that it is not reasonable. So there are 2 aspects to it. One is now the regulation itself says I can take an amount up to 5 crores. So that is probably now somewhere curtailed that it cannot be more than 5 crores. Second is performance linked incentive fee is permitted. So suppose we do a resolution of, let's say, 3,000 crores, we can have a amount up to 5 crore rupees. So that's how you can think of putting it. Now let us see what the table says. So this is the table with regard to the minimum fee. So we have seen it. Now what Rishabh was asking, and some querist has put it on chat box, whether this minimum fee would be payable at each point of time. So the first clause says submission of application for approval of resolution plan. So this fee, which is fixed, will only be paid for the period in which the plan is getting approved by the COC. Once the plan is filed before NCLT, this will stop. So this ticker was not there in the law as of now, but this has come now by way of an amendment.
Second, so there is another question. If the company is a going concern and plan is already approved, so yes, RP has to continue the company as a going concern. So what about the fees of IRP, RP at that stage? That's one question.
Rishabh, let us read all the 4 clauses, then we will interpret what is the timeline. So second one is submission of application of liquidation. So there could be one contingency of approval of plan. There could be another contingency of liquidation. Then there could be a contingency of withdrawal of application under 12A. And the fourth one could be closure of CIRP process. Now here this closure is worded very vaguely. If you see under law, we normally have resolution plan, liquidation or withdrawal. But there could be some instances where the matter goes to Supreme Court and there could be a jurisdiction issue and everything goes for a closure. Now here the point is they are trying to show that this particular fixed fee will only be for the period working. And once the application is filed, then the COC will have the right to decide the fee. So that is one, that at the time of filing of application, whether plan, whether liquidation, whether withdrawal, all this fixed fee will continue, but it will stop the time when the application is filed. So beyond that time, it has to be fixed by the COC. Now, Rishabh, you can ask the query.
See, if the company is a going concern, RP has to continue the company as a director or like that. So the resolution plan application has been filed. So what about the fees of IRP, RP in the company as a going concern?
IRP would obviously be replaced by or confirmed as an RP. So question does
Yes,
not
yes.
come because you are covered in the clause A. The
Yes.
fixed fee would be always by till the submission of application.
But after the submission of application till the approval of plan by NCLT, what of the fees of the RP when the company is a going concern?
That's what I said though. It will be have to be decided by the COC.
Okay.
Law will not come to the rescue because they have only tried to organize, try to structure the fee only when the plan is not filed for approval before NCLT. Approval of resolution plan very importantly, because I have seen cases where once a plan is filed, let's say there is some change in the law, there is some challenge with regard to approval of plan. Let's say some failed bidder comes and he shows some illegality. Probably the process would again start. Again, a plan will have to be voted for. There could be 2 or 3 plans again in the second round. As we have seen in SR also, the matter went on for approval of resolution plan for 2 years because the matter went from NCLT till Supreme Court. So such type of things may happen, and therefore submission of application, again we will have to construe it that the plan is approved or liquidation resolution is filed. Now that interim period when the NCLT does not order on a particular application, that will again will have to be decided by the COC. Now I think there could be 2 repercussions, and which we have discussed in various other platforms also, wherein there could be an issue that RPs could be changed, because now when we go further, it will say that COC can also be convened even after the filing of application. Now this particular law was not there, and it only came by way of a judgment in the case of Videocon, wherein the court said that COC does not become functus officio and it would continue even after the plan is filed. Whereas the views taken by other benches was that once the COC approves the plan, it becomes functus officio, and therefore any COC has to be convened only with an order or the approval of the NCLT. So probably that error is cleared. We will see in the further regulation. But now there could be something like this. An RP tries to revive the company, files a resolution plan application, and thereafter COC changes him, because the fee which the erstwhile RP was charging, and they want to bring a new RP because they might say that now we don't require the services of resolution plan, because to bring a resolution plan itself is a tedious exercise on RP. So I think this is a negative repercussion which might come, and probably they should not have left it open, and they should have clubbed it that until the order comes, whatever is the minimum fixed fee should continue. But still that clarity has not been there. In fact, they have again put the ball in the court of COC. So Suresh sir, your views please.
Actually, one side bringing the resolution plan is a challenging task. Second, after COC approval, getting the adjudicating approval, authority approval is again a very big challenging task. It takes 1 year, and the kind of data requirement they ask for, so many things. Unless the same RP continues and he supports the legal counsel for getting that approval, the whole thing at the adjudicating authority level will drag forever. So that's a big headache in that thing. So obviously, I don't think COC will do any such kind of research by appointing a new RP at that stage to reduce this. So here RPs have to play a little bit cleverly when they pass the RP appointment related resolution or fee related resolution. They should pass a resolution that the fee will be so and so per month. They should not use this up to the approval of resolution plan and all those statements. They should not bring it into the minutes, and they should complicate for themselves. When they pass the resolution, they should make it very clear it is per month until the approvals, until the final closure of CARP. So they can safely do the talk. So that's my view on that, Matt. And when we are discussing about the performance incentive on the previous slide, I just had one comment to check with Nipunji also. See, we said the performance incentive is a discretion of the COC. What if the resolution plan, the applicant himself provides for a percentage, be it 0.5% or 1%, part of the plan. whether their COC has any discretion to play it, to modify that. How the appropriation and all are discretion of the resolution applicant. So in case if he makes a provision for the resolution applicant, means professional a particular performance fee within this particular stipulated law, does the COC have a discretion to alter it? So Nipunji, I just wanted to have your comments on that stand.
Sir, I will just again go back to the slide. What is the language? Let us reread again. The fee under this regulation may be paid from the funds available with the CD, contribution by the applicant or members of committee, and or raised by way of interim finance, and it shall form part of the insolvency resolution process cost. So my view is that practically speaking, normally we see the bankers are not ready to give any other shelling to us. If we are bringing a resolution plan, they will say whatever you want, you take it from the RA. So probably we will have to explicitly say that this much amount would be paid by the RA. Yes, the decision making is with the COC, but the person who is making the payment is the RA. Probably like the decision making is with the wife and husband has to make the payment, something like that.
Yeah.
Himanshu sir, your views, sir.
I agree with you, sir.
So I think now let us go on to the performance linked incentive. So this is the table. Now here I had a very fine question in what Rishabh query was. Let us extrapolate it, and I have got a case like this, that they are replacing the RP for this interim period where the application has been filed, and now they want to change the RP, and they can very well do it because COC exists. Now, whether this performance linked incentive, which is approved by the COC, will go to that RP outgoing or the incoming. Because if you read the law literally, law only says RP. There is no clarity on the person who would do it. Himanshu sir, your comments on this particular aspect.
Yeah, it's a very contentious issue, because a person who has done maybe 25%, 50% work, he may claim that at least whatever incentive I have also contributed in that. So, but the thing is that whatever is the IP, whoever is the IP may claim that here it is only IP. So, yeah, it's a challenging thing. Now let's see how the law evolved. But your point is well taken. This is going to be a issue.
So they define performance linked incentive as if, let me read what they say. Performance linked incentive fee for value maximization may be paid to the RP. So Suresh sir has clearly said it is may. So it's a discretion. Here we cannot read may as shall. So that is something very important. At the rate of 1% of the amount by which the realizable value is higher than the liquidation value. So now we have to see what is the realizable value, what is the liquidation value, and the difference between them. After approval of the resolution plan by the adjudicating authority on commencement of payment to creditors by the resolution applicant. So I think there is some trouble here. They are using the word payment to the creditor. Rushabh, can you just mute some?
Yes. I'm
okay. So here the word they are using is amount payable to the creditors. I think creditors is maybe a wrong word, and they should use the word payment to stakeholders, because sometimes somebody may argue that they may not be creditors, but they are stakeholders under section 53. There could be statutory authorities, because technically speaking, they may not be creditors. There could be shareholders who are not the creditors, who we call contributories in the case of winding up or liquidation. So such type of issue might come, and I think there is probably a drafting error when we say payment to the creditors. But here I have another issue. They have given an example that realizable value, let's say, is 100 rupees. Let's say 20 rupees was the liquidation value. So this 80 rupees is the excess. So 1% of the 80 rupees should come. This is an example given in the regulation itself. Now, I don't understand how a company whose liquidation value is 20 rupees, somebody is going to offer 100 rupees. At least I have not seen. In fact, it is other way around normally. All the promoters and all the stakeholders would say that it's worth value of 100 rupees, and somebody would come and say, no, it is 20, 30, 40. Because if it was worth that much amount, why would the valuer not discharge his duty and value it probably at the correct level? So I think this is again something which is going to create a deeming fiction. How that would be dealt, again, we will have to see how courts interpret this particular point of performance linked incentive on the basis of realizable value and liquidation value. Now, let us
Actually, I have one point to add up in this thing,
Please,
Nikunji.
please, sir.
See, really speaking, many of the resolution plan comes slightly higher than the liquidation value. Say the liquidation value is 10 crore, the plans, the COC approves only if it is 11 crore, 12 crore, just to keep them on a safer side. The challenge for us here is they have used the word 1% of the amount by which the realizable value is higher than the liquidation value, payment to creditors. See, here what happens is the liquidation value due to the creditors, say operational creditors are zero. Generally, liquidation value available to creditor is zero. But they will be providing for some amount, say 2%, 5% in the plan to them. Whereas in the case of financial creditor, the liquidation value due to them will be slightly higher. They may get 1 rupee less. So now, whether you will see this particular margin gap at a total level or up to individual creditor level is a challenge for us. And certainly at operational creditor level, it is always on a higher side. And if the valuation is not much varying, then financial creditor may get slightly lower or equivalent or something like that. So this particular computation on 1%, like creditor wise, you have to go and calculate and see, or the total liquidation value versus the realizable value at a macro level, whether you have to calculate, is a challenge to the RP in this matter. Even if COC approves, this particular calculation thing needs to be clarified by the IBBI by way of an example or by way of a circular, and that's my particular observation on this, Nikunji.
So, sir, what I could gather from this performance linked incentive, if there is a gap between the realizable value and liquidation value, only in that case, RP is entitled to performance linked incentive. Am I right, sir?
Yes, but to which creditor? For each creditor, there can be differences. Some will get gain, some will get loss.
So, sir, you are saying it has to be checked on creditor to creditor level, not on an overall basis.
Because they are saying like that.
No, sir. Let us assume that total payout in resolution plan is 100 rupees and liquidation value is 110. So I am going to get nothing.
Right, correct. But when
Then I should try as an IP to get lesser liquidation value and more payout in plan.
Correct.
Your view,
For
sir.
example, they are saying the payment to creditor means obviously CERP cost and all are not payment to creditor. After reducing the CERP cost allocation and all those things, payment to creditor, how much? Versus overall liquidation value due to them. Then you will do it on individual basis or on overall basis with balance. There is no clarity under the means law as of now. That was my observation on it.
Himanshu, sir, your view, sir.
Sir, my view is it requires little more clarification from the department. It at the way it is looks like it's a gajar to the RP that he should work more and get more and more value of the resolution plan and more than whatever is the liquidation value. But Nikunji, Singhviji has already said that liquidation value is always lower than what one can fetch from the ordinary course of business. So the question of getting more than the liquidation value is very difficult. So I don't think anybody would be able to claim only fortunate person can able to claim more than the liquidation value of the particular asset. But that again, this entire thing need to be, need some clarity. As you rightly said, there may be financial creditor, operational creditor, and other creditors. And if, the distribution is also, if you are, deciding based on the distribution among these three kind of auditor, these type of creditors, in that case, again, how it is to be distributed, how it is to be determined, I am not very sure.
So here there are two parameters. So performance link is, first we discussed, it is with regard to time period. Second we discussed is with regard to gap between both the valuation. Now let us understand, if suppose this timeline is not in our hands. We have seen various times there could be a stay, there could be a appeal, and there could be appeals to the Supreme Court, and substantial time is wasted. Now here I think, as a matter of advice to all the RPs, now whenever you go for approval of resolution plan and there was some stay or something like this, please make sure that you also pray for exclusion of that time period and don't ask for extension of time period. Because if you do not ask for exclusion, by default, more than 330 days, we are going to get 0. Because somebody might argue that these days are not excluded and therefore your 330 days timeline has gone, even though we have tried to bring a resolution in time. So that is going to be again a very tricky thing. Yes, Suresh sir.
On a lighter side, COC should not deny fees for this exclusion period to the RP.
Oh, so
Yeah.
sir, you have raised a very important point, and I was also wondering. So suppose, let's say there is a resolution and we have got, let's say 10 crores of resolution for a particular CD. Now, suppose there is a performance linked incentive and we have paid him. Now we have paid him because it is a CIRP cost that is clarified. Now, suppose he pays only 5 crore and then defaults. The RA defaults after 50% of payment. Now, whether we are asking that RP to again come and reimburse, because probably he must have taken the incentive, gone to his home. Now there, you please come back and give us the money. So that is again going to be very, very tricky situation, because in the payment terms, they are saying the word payment to the creditors. Now we would obviously presume that the payment is, as far as the plan is approved, RP is discharged, because most of the cases after that IBBI disciplinary order, they are not recommending themselves in the monitoring committee. And as such, law also does not provide of any monitoring committee after approval of plan. So he may not have any right or control how the plan is implemented and how the payments are made, how the company is continuing. So there could be again a bone of contention with regard to payment, because we are saying it is a CIRP cost and it will have to be paid in priority. Himanshu sir, your views and any view on this particular aspect, sir?
I agree with you. It is the prior, it's a first payment. And if RA default in making the complete payment, so probably we may witness kind of clarification that that's kind of a performance linked payment may be kept in abeyance, and only after completing the process of entire receipt of the money only from the RA, this kind of performance link amount may be paid, because again, it is the contractual thing. So anything can happen, but let's see now. I have no further comments on that.
So now we move on to the 4th amendment, and it has come on 16 September. So we had 3rd amendment on 13 September. And just after 2 days, on 16 September, we have the 4th amendment. So you can see how they are updating or changing the regulations. Because as in, I think IP, we will now not buy new books. We will only download it from IBBI website, because on every second day, if the amendments would be coming, it will be very difficult to keep a book.
So
I
you should move an RTI in this. That why IBBI is amending such in short intervals.
Honestly speaking, as an IP, if we keep track of the draft regulation, what they are circulating, you can always see that yes, in another 2-3 months there is an amendment pending. Whether it is coming together or it may come in a gap of 1 day, 2 day, or 10 day, or 15 day. But if we are able to keep track of those the draft regulations given out for suggestion, and if we are value adding by giving amendment, these are all just expected things only for all of us.
So Rishabh was saying that move an RTI. Last time I moved an RTI in 2018, when they came out with the circular that once the show cause notice is issued to the IP, he cannot take any assignments. So I basically went to the route that what is the reason. So please provide what was the reason of bringing such a circular. Also say the list of the persons who have been issued show cause, because today if NCLT appoints an IP, I do not have the list of show cause notices. So how will I know? And that was rejected by IBBI, then first appeal, then it went to CIC, and it is rejected by CIC also. So you can go on the IBBI website. It's a reported case. So that is how under RTI you get the replies. So there is no chance. They say that the executive is having the power, they will do, and they are not required to explain you what are the reasons behind it. And therefore, if you see most of the amendments, all the amendments have not been come by way of a discussion paper and then notified.
Yes.
So that is a difficulty on the part of regulator. But let us see. Fourth amendment. So this is something which is new, and they say that you will have to have a mail account, exclusive mail account. So the law says now the IRP shall open an email account and use it for all correspondence with stakeholder, and in the event of his replacement by RP shall hand over the credentials of the email to him. Now the RP shall, in case of his replacement with another RP or a liquidator, hand over the credentials of the email to other RP or the liquidator as the case may be. Now, a very interesting question came to me. One of my friend IP at Mumbai, he said me, sir, when I open an email account, I have to give the details of my birth, the details of my mobile to get an OTP, to authorize, to verify that I am the person. Now, suppose I am person who is given some credentials which are very private in nature. So will I hand over it to Sureshji? Will Sureshji's name change? The ownership of that email account will be how regulated by IBBI? Very difficult to say. Secondly, process email ID, like I have seen in big concerns, they use their own server to create an email ID so that all the mails can come into their domain and they could be analyzed by their team. Now to have an email ID and probably get it transferred, we will have to have an external server. We cannot have our in-house server. What this regulation means that now we will have to have an email ID with a server, obviously bought in the name of CD, so that it can go on from IRP to RP, RP to liquidator, so on and so forth. So and again an additional cost, I would say, on the RPs, and to hand over this particular thing, we will have to probably get every details given at the time of creation of email ID to the new incoming professional. Suresh sir, your view, sir.
Yeah, actually, see, you have to see, for example, obviously in our own domain, we cannot create the mail ID because we can't hand over our own domain access to some other parties if at all there is a changeover. So certainly we have to go with some external party mail IDs like Yahoo or Gmail or wherever it is. So our internally what we had some policy calls on that is we will not open that account as a personal thing. We will always open that account as a business account. So ideally, when you open it as a business account, then only you will have legal right to transfer it. When you open as an individual personal account under a Gmail or anything, legally you are owner of it. It can be succeeded by your successors, legal hands and all by claiming it. It is not that some third person can take over your personal mail created under a Gmail. That actually is not permitted. It is not supposed to be done. So what we have internally decided is we will create it as a business account, even in the Gmail or Yahoo they provide for. So when you register, please register it as a business email rather than personal email, and then go with that. So that's one major thing we have to do it off when we are doing. But now the question, Nipunji, what I have is, see, for example, some of the cases where we are the IRP or we are the IP, earlier we have not created process email because it's not a mandatory. So we had our own mail ID, we published them and we get it up. So process mail ID was not there. So in such cases, now the case may be under RT stage or the case may be under liquidation stage. Now, is it mandatory to create a process email ID at this stage? Obviously no, because even at this stage also the transfer can happen. The law says the IRP has to create. Now that IRP is not done, now it is either RP or liquidation. Are we under compulsion to create a process email ID? Is the question to me, to you.
Sir, my view is that there is, wherever they have said it will apply to a cutoff date or maybe apply retrospectively, there they have clarified. So I think since they have not said anything in this particular regulation, so we can think that it is a prospective one. And I have also suggested RPs that you please take a backup and a bulk backup of all the mails relating to the process and get it in the physical form and hand over it to the new incoming RP or the liquidator, so that tomorrow he does not say, I do not have the complete backup. Because not only this, I have seen cases where RP and liquidator are now filing applications for non-cooperation on the erstwhile IRP or RP. So that is also now being started because the new professional is saying this was the duty of the erstwhile professional. In fact, one of the case, and probably the amendment is also come, I have seen a liquidator, he went to take the custody of asset and the persons there said that there is no asset of the CD here. And when he asked the erstwhile IRP and RP, they both said that we never took the custody of the asset because it's a barren land. And today they are not able to earmark the barren land and sell it off. So probably therefore, again, there is an amendment that geographical coordinates will now have to be given of the assets of the CD. So this problem probably will keep on coming for all the amendments, because everything I suppose will have to be construed prospectively until and unless the regulation explicitly say it is retrospective or the erstwhile person will have to do it. Himanshu sir, any comments on this, sir?
Yeah, per se, this amendment is a welcome amendment, but as you rightly said, there are a lot of challenges technically. So it has to be resolved technically. And one of the thing is that, yes, we can take a complete backup of the email and hand over to the incoming IRP or RP or liquidator, whoever may be, and resolve this issue. But yes, there are challenges technically. What you said is right.
So another amendment, and I think this is an amendment which I don't know how far it would affect the complete CIRPs under the law, because there are some differentiation. So let me first read what is the amendment. The IRP shall send a communication along with a copy of public announcement made under Regulation 6 to all the creditors as per the last available books of accounts of the corporate debtor through post or electronic means wherever the information for communication is available. Now here, let us pause for a minute and understand what the regulation is saying. The regulation is saying IRP. So now you see there are IRPs practically for 30 days, 40 days, 60 days, maybe the initial period. They are saying that along with public announcement, it is now your duty to inform all the creditors as per the books of accounts of the corporate debtor. We are aware IRP, whenever he takes a charge, normally he will not get all the books of accounts. Forget about the books of accounts, he will not even be allowed to enter the corporate debtor's office. He will have to go file a section 19 application, take police assistance, and do all sorts of things just to enter into the premises. Now they are saying books of accounts will have to be seen and the communication will have to be sent. Now there is no as such law that you have to maintain a KYC of each and every vendor of yours. But in a way, this particular regulation requires some amendment in the company law also. Now, any vendor which has been transacted or which would be transacted by the corporate debtor, they will have to maintain a KYC now. Communication address, PAN number, because all these things would be required while lodging the claim also. So from that angle, every vendor will have to be informed because he is a creditor, so that he will file the claim, and therefore this public announcement will have to be disseminated to all of them. I don't know how far this would be possible, because again, there is a saving clause which says that if it is not possible to send a communication to creditors, then it would be deemed to be a public announcement. I think this is somewhat an effect of the Rainbow Papers, because in Rainbow Papers, Honorable Apex Court said that the basis should not only be the claim filing. The basis should shift from claim filing to the books of account also, in case there is no claimant coming forward. So they have said in Rainbow Papers that if a statutory authority does not come forward, but there is entry in the books of accounts, from the books of accounts we can tally it, then we should consider that particular claims also. So this particular regulation, I think, would be very difficult, and it would increase the initial cost of the insolvency, because each and every person to be sent by post, as we know, if you send somebody by speed post or registered post, it will take good amount of time, and everything is time bound in as far as CIRP is concerned. So this is going to be a very big costly affair. Your view, sir?
Yeah, see, actually, the effect of it is all the IRPs are going to file 19 petition on the first week itself. They will say to safeguard themselves, whatever the is in 95% of the cases, certainly they are not going to get the vendor list or the contact addresses. Even if they give books of account tallies, they say they will have only party name. Neither email address nor the full address of the parties will be available in the tally database or whatever they give it. So it is effectively 99% of the cases, IRPs are going to file 92 petition asking for all these details from the promoters. This is what it is going to happen. Otherwise IRP at risk. What is the effort you have taken to collect this data to send this information? So that to defend himself, he has to go with this 92 petition to safeguard himself. That is going to be the practical scenario going forward.
So, sir, I want to just ask you, suppose this is the case, though they have inserted only in, as of now, CIRP regulation. Suppose this is a case of pre-pack insolvency. The law says that whatever list is given by the promoters should be confirmed and used by the RP. Also, there is no public announcement required in that case.
Yes.
Only website you have to publish it. So what will happen in the cases of pre-pack? Suppose this regulation gets extended. Forget about the pre-pack. Let us assume personal guarantor.
See, the biggest difference between the CIRP, this normal and the pre-pack is the cooperation of the corporate debtor. In pre-pack, you are getting the cooperation of the corporate debtor to do it. So you will get at least 50%, 60% of the information. But in normal CIRP, the cooperations are very, very limited, or there is a non-cooperation. So obviously, this is going to be a challenge on the case. The probability of going for a 19 petition in pre-pack and all are very, very less than this. Absolutely, the corporate debtor himself is coming forward to do all those things. So pre-pack, we are the risk is minimal, or rather insignificant comparing to this normal CIRP process where possibility of non-cooperation is very high.
So, sir, suppose this is extended to personal guarantors insolvency. So probably my books will say that I have to pay to my milkman, to grocery person, to house help, and this
you are using a word my book. In reality, in personal guarantor, there is no book. There is no book. You will not have it. So that there it is books of account getting is a big challenge. See, but the beauty there is when we file the report and all, we will be calling upon our personal guarantor to provide the details of all the creditors, all the dues, whatever we have. So it is all to what extent he provides It is going to be the point for us. It has to be, we all have to call upon the personal guarantor or the whoever is the party to make an affidavit by providing all these details, and we have to swear on it. That is the only way we will be able to proceed on that matter if it gets extended.
So it is again here written last available books of accounts, not audited again. Last available books of accounts.
That's just to make sure that you go with the latest information instead of working with some 2-year-old audited balance sheet.
So I have another thought on last available books of account. Suppose I have taken over a company which was closed for, let's say, 5 years. Now I go by the books of accounts which were 5 years old and send to XYZ creditor. Let's see, as per books, this is your amount outstanding. Now what will he do? He will file a claim, because I have, in a way, from the corporate debtor side, given an acknowledgement indirectly of a debt which probably in law may be time barred.
Now here I just want to make one specific thing. If an IRP sends the amount due in his letter, he is gone for a task. The law tells that the CIRP has commenced the public announcement intimation only. You are going to give it to the operational creditor, whichever creditor. You are not going to tell him your outstanding balance in the books is so and so. If you tell it, then you are in a suit. Because again, he will claim something, it will be waiting to do. So you have to restrict your communication to intimation of commencement of CIRP and requesting him to submit the claim.
So, sir, I am telling a situation where it is 3 years beyond. So, technically speaking, as per law, nothing is payable. If the corporate debtor was there, if the promoters were there, they would have said it's time barred because of limitation. Now, even if I tell him that please file your claim, please tell your amount, in a way, I am saying him that in the books of account, there is a figure against whom there would be some amount payable. So again, this is going to create a lot of controversy, because this is like "Aa bel mujhe maar." Probably we were going by the latest books of accounts which are audited and we were relying on them. But now you have to tell each and every person, please come and file, please come and file. So this is going to be very, I would say, difficult task. Again, as far as rainbow paper is concerned, in rainbow paper, Apex Court has observed that statutory authorities are not required to file claim. Now, as per this regulation, I will have to intimate statutory authority, please file your claim. So again, my intimation and their filing may be connected, may not be connected, because there would be some dispute with regard to the demands raised by some of the statutory authorities. So again, this is going to be very difficult to intimate all the creditors. All the creditors, I think, is a very difficult task. Himanshu sir, your views, please.
So first of all, I think that this particular amendment is clearly fallout of the rainbow matter only. And it has opened a Pandora box to many cases to come up in future, as you rightly said. And there are two aspects which I would like to say. First of all, you said that say 5 years before, if somebody has registered their in the books of account, their claim is there, amount is payable, and after 5 years it is time barred. That person has not registered the claim. Here in this particular case, I think we as a IRP, we should take the help of an advocate like you, where the drafting of that letter intimation should be such that it is neither confirmation nor approval. This is just based on the information on my last available balance sheet and in compliance with this particular provision. So if you are a time barred matter, then probably it will not apply this letter itself, or something can be ignored, or it will not be admitted, or this is not the admission. So clearly we need a professional help from the people like you, number one. Second thing, see that many, as you rightly said, that sometimes or in various occasion we will not get the address or email ID of all the operational or financial creditor. In that case, probably the proviso will come into our rescue. The proviso says that where it is not possible to send a communication to creditor, the public announcement made under the regulation 6 shall be deemed to be the communication communicated to the creditors. So we need to ensure that we have taken a reasonable care in this particular matter, that we are unable to find out the possible email ID or communication, and in that case we have to rely on our public announcement. But yes, wherever this is possible that to communicate, we need to communicate and try to resolve this issue. But there are going to be a lot of challenges within the stipulated time period. How this will be happen, it's only time will tell.
Sir, I have a query.
Please.
Sir, as it's already stated in the regulation 6A, as you have this the current slide, it already states that we need to send a communication along with the copy of public announcement. So communication format will be like that. There has been this corporate debtor has been admitted to CIRP process, and the insolvency process has started, and I am acting as a IRP along with the copy of the public announcement that we need to attach it. Right. So, sir, I don't think so. Okay, we need to tell them that from our books of accounts, this thing is appearing, or you need to file a claim. Even if we ask them to file a claim, we can say you can file a claim if any available with you, if any. So they will take a call. The creditors will take a call whether you need to file. They need to file a claim or not. It just states that there has to be a communication only that CIRP process has started, and we can attach a copy of a public announcement. If they will have a claim, they will file. And even if we mention that yes, you need to file a claim, so you can file a claim if any. Like that, we can state, and things can be very much simpler in this manner wherever the data is available, sir. And so second thing is that whether this interim resolution professional is stated specifically, can it be also interpreted as a resolution professional? Because as you said, in the first month, so many things are not available. Maybe the resolution professional, if I am continuing as a resolution professional or some other person is coming, whether he is exempted from this communication being to be sent to the all the creditors which he comes across after say 30 days or 40 days, whatever.
So my response to your query is, your suggestion is really a good suggestion. Without admitting or without saying, only we will send the copy of the public announcement, and that is one thing we can definitely think of. And another thing, what you said is, can you repeat your second question?
Sir, IRP or the RP, sir, interim resolution professional or whether this resolution
yes,
professional is also responsible to do the same.
I think when this is possible, then as a RP also, if we send with the consent of COC, there should not be any issue, because the law provides the underlying provision is that we should report, or we should take into consideration the whatever the outstanding is there as per books of account, and if we act in a bona fide manner, I don't think there should be any issue. We should be proactive now to avoid any future litigation.
Sir, I think we will be able to answer it if we read section 5 subsection 27. RP includes IRP. So for all purposes under the code, IRP, RP are treated as same. So if something has not been done by IRP, obviously RP will have to do it. If something has to be done by IRP by any reasons, probably when the handover is done, and we have come across something like this, we will have to comply with it. Because now the logic behind this regulation is some person should be informed. So basically, right to know, I would say right to know has come by this way of regulation. Normally, it was on a pull basis that I am giving a public announcement. Somebody interested may come to me. Now it is that you are informing. So their right to know is somewhere now enshrined in this particular regulation.
Nipun sir, just to add on,
yes.
Can IRP, RP give a rider in the notice that is subject to the approval of the statutory auditor as on the insolvency commencement date? If the claim is there, we will admit it with a rider in the notice itself.
My view is with respect to statutory auditor. See, I have seen books of accounts, and even in forensic applications, auditors are made a party. So it will be very difficult to rely on any independent professional, because ultimately, as far as IBC is concerned, onus is completely on the insolvency professional. So therefore, when we are adjudicating a claim, probably we are verifying the claim. Adjudication is on the second half when we are liquidator. When we are collating and verifying the claim, we will have to go by the proof of claim submitted by the claimant. Because I have seen cases where the claim in the books of accounts is, let's say, 100 rupees, but the proof of claim submitted is sometimes running into 1,000 rupees. And there have been so many IAs, so many litigation with respect to the claimants. So it is always better to go on the evidence produced by the claimant. And if we are able to justify, see the justification in, let's say, bank statement, see the justification in, let's say, the agreements, we will have to go by that rather than going by what auditor says. Because in thousands of cases I have seen, auditors are not even complying the basic accounting standard of retirement benefits, wherein the employee ESI, PF, bonus, gratuity should be accounted for. And if there is no provision or there is no policy taken by the company, they should actually qualify the report. But in maximum cases I have seen, the employee benefits, the PF department is the biggest department which is now coming as a claimant after this state tax department of Rainbow. I have seen numerous applications being filed by the PF department that they have not been provided for. Once such type of a thing comes, it will be outside the liquidation estate or outside the corpus. So now they are on equal footing. So it will have to be the claim which is submitted by the claimant, which has to be taken on a first priority rather than what auditor says or books of accounts says.
Sir, one more. Yes, Malignant.
Nipunji, in this context of claim verification, I just wanted to one small clarification from you. In the example said, if it is a 5-year-old claim, if it comes. So just wanted your opinion, whether IRP or RP is empowered to decide on limitation. Limitation is a thing which judicially it has to be decided whether RP, IRP has power to adjudicate the claim on the basis of limitation. If the books of account shows the amount and if the party is claiming, but it may be 5-year-old or 10-year-old, whether he has a right to deny it on the stand of Limitation Act.
So, sir, I think similar issue is pending in NCLAT, and I am aware about two matters because I am involved, wherein the limitation was taken as a ground to reject a particular claim. So let us assume a very simple case where the bank account turned NPA, financials were not filed, and we are aware some of the promoters are outside India, so they cannot be located even. Now, in such big cases where the claim of banks is huge, books of accounts have not been maintained, and we are aware that it is beyond 3 years. Now, in that case, my view is, my personal opinion is, we should go by the proof of claim rather than going by the Limitation Act, because today we will have to consider it as a transparent person who will protect the right of the stakeholders. Yeah. IP is a protector of a stakeholder's right. So therefore, we should not take a myopic view of Limitation Act. But who will take the view? Definitely the promoters will come and argue that this particular claim has wrongly been accepted and it is time barred. Probably promoters will come out. And I have seen such cases where 12A is moved for withdrawal. Some creditor comes and intervenes and says, sir, my amount is not getting settled. Please do not allow withdrawal of insolvency. Then the promoter comes out with an argument and says, sir, his claim is nowhere in the books of accounts and it's time barred. So such type of tricky issues will come. But as an RP, my view is Swiss Ribbon is very clear. We are not an adjudicator. We will just verify the claim and collate the claim. It is for the court of law to decide whether that claim is time barred, frivolous, escalated, huge, whatever.
Yeah.
Sunit sir,
Sir, yeah, sir, one query is that this regulation 6A is just a responsibility cast on the insolvency professional, or it will give a right of litigation to the creditors as well. Sir, say for example, sir, कि अभी तो क्या कर रहे हैं? We are just publishing Form A, and people come out with the claim. Say out of 10 financial valid creditors, only 2 have come up. So we take them into the consideration, constitute the committee of creditors, and take the CRP process ahead, like appointment of a resolution professional, whatever be the resolution that we get. Say, for example, a major financial creditor left out to submit his claim because of his default. He missed out on these things. Even in recent matters, I have come across where a financial creditor having almost 23% of stake missed out to file the claim. And he came up after 90 days. And somehow we have to accept the claim, taking the view that resolution plan has not yet come up or approved and something like that. And we took the approval from the committee of creditors and we accepted his claim. But sir, what if that case, if one person has genuinely failed to file a claim, means he missed out on the claim, and after that, say after 3 months, he is coming up with a claim and tell us, okay, you did not intimate me, that's the reason I did not file a claim, and say he is more than 66%, take for an example, he is more than 66%, 70% stake is his, and then after 3 months he says that, okay, you did not intimate me, that's the reason I did not file a claim, and so the entire CRP process will be reversed, or it will be stalled or something like that. So you take me from the first state, and maybe I don't want to appoint you as a resolution professional even. So kind of a thing. Can this litigation happen from a committee of means creditors claim, or this is just a regular responsibility cast on a insolvency professional?
So, sir,
So
I
this will be a big thing that will be coming up because of
we
this.
should read again what it says. IRP shall send a communication. So technically speaking, it is a onus, it is a liability, it's a duty of the IRP to send that communication. But we are saved by the proviso. So if the proviso is there, then probably we are saved. We will have to make out a case that there are evidences that we cannot, or we were not in a position to send that communication, maybe because incomplete address or PAN number or change of address, we don't know. But if such a situation arises, my suggestion to you is, and I have suggested and we have got succeeded also in court, that suppose there is a financial creditor who we are able to see from the books of account, and suppose that financial creditor is not filing a claim because of XYZ reasons we are not aware. That financial creditor charge is also created. It's a bank, let's say. Claim is not shown, but books of accounts clearly show their claim. Why don't we file an application before the court and say this is the claimant? As per this, he should have filed it. Tomorrow, he might cast some allegation on us. We have wrote to him, but he has not responded. So therefore, probably he will have to come to the court and make a statement. Even that person does not come up in the court, we can then definitely take a view that his claim he is waiving off. Because
but for how many creditors?
No, I am saying only for financial creditors where the root cause is COC. Kindly appreciate that the complete process of CIRP is based on the decision making of COC. If we are not taking caution in constituting COC, I have seen number of cases just because the constitution of COC is hit by the claim. IBBI is also coming down heavily on the RPs. So as far as financial creditors, and that too from the books of accounts, we can make out. I suggest all of you to move an application in case a big financial creditor is not filing a claim. Because even otherwise, the law is like this. If that financial creditor is there, books of account is there, after rainbow papers, we have to take that claim into consideration. We will file an application asking for the cost of the CIRP to be paid by him. Forget about him filing a claim and getting some resolution plan. At least we will get our cost part. Once you ask for cost, they will have to make a statement whether they are going to waive their claim or whether they are going to file a claim. In fact, this happened in one of the matters, and I think I can quote the name also, Intelligent Textile matter. So basically what had happened was, it was initiated by a Section 9 operational creditor. Now sales tax department claim was the highest claim. There were no financial creditors in the company. So we constituted, means the RP constituted the COC. He invited, I think probably they did not turn up in the first meeting. Then subsequently in the second meeting, they turned up. And when they turned up, the constitution was 60% of the sales tax department. I am talking about Gujarat sales tax department. So again, directly covered by the rainbow paper, and 40% of the original operational creditor. Now here they stopped coming from the subsequent COC, saying that we will not contribute any cost because we are not going to get anything, because the company did not had much tangible assets. Now here in this case, we had to file an application before the court saying that 60% of the CIRP cost will have to be borne by them, because their claim is there in the books also, and they have confirmed also. Court ordered them to contribute in the CIRP cost. Now the liquidation application is pending before the court. Probably the liquidation would also start. But this is the situation, that the person who is going to come in the COC, whether he is OC, whether he is FC, whatever the situation, if he is going to be liable to make payment to our CIRP, let us bring him to the. So I think we can move on to the next
Yes,
slide.
yes.
And this is after expiry of CIRP period. So again, this is very tricky situation. And I was talking about this regulation. So regulation 18.2 now has an explanation. So regulation 18.2 said that RP will call a COC from as and when the request is there from the COC members constituting 33%, or normally as and when we are required. So we have that section 28 wherein the list of items are there, which has to pass through COC only. Let's say appointment of some professionals or something like this. Now they have inserted an explanation, and now the explanation is, for the purpose of this sub-regulation, it is clarified that the meeting may be convened under this sub-regulation till the resolution plan is approved under 31(1) or liquidation order is passed under 33, and decide on matters which do not affect the resolution plan submitted before the adjudicating authority. Now, first thing is they have clarified. So we can say the day one view was this only. So COC was always into existence even when the application was filed. This is now coming clearly by IBBI. Second is, even when the application for approval of plan or for liquidation is pending. So if it is pending before NCLT, COC can be convened. So COC may be convened, but only those decisions can be transacted which are required but which do not affect the resolution plan already pending with NCLT. So once a plan is approved and filed with the NCLT, we cannot renegotiate or remodify the plan by calling for a COC. This is very clear. But this, I always say, devil is in details. So if I read it and interpret it otherwise, so now section 28, which normally was required during CIRP process when the plan was pending, we used to go to COC for, let's say, any type of approvals or related party transactions or delegations of authority, employing some new members like employees or workers, taking some call on purchase and sale if it is a going concern. All those things have come out again by way of explanation. So my interpretation is, after this explanation, now anything which otherwise was required under section 28 to go through COC is resurrected again. When this explanation was not there, what was normally done is COC was called. COC was only called to maybe, let's say the payment is pending of security guards, to maintain the plant, to pay for electricity, to pay for water. Something which was essential was only required to be called in COC and ratified. But now it says you can call COC for all the matters except a plan being affected. Your views, sir. Suresh, sir, your views.
Sir, actually, there was a typical scenario now when in one of the cases where the resolution plan is submitted. For example, if a resolution plan provides for a performance guarantee to be given by the resolution applicant within 30 days from the COC approval. So generally, there is always a condition within 10 days or within 30 days, 10% of the plan value or 20% of the plan value they will give for as a performance guarantee. But in the meantime, the resolution plan, because it is approved in the COC, within 7 days, they would have filed with the adjudicating authority. Now, a question has come, because the performance guarantee has not been received within that time, now the resolution plan needs to be declared as a failure, even before the adjudicating authority considers the plan. So in that context, whether the COC is empowered to discuss on that failure of the performance guarantee, pass a resolution to report to the adjudicating authority is one, some exceptional scenarios, rarely it comes up. So this such a scenario has come up recently in one of the case. Now this kind of clarification in this section, in this particular regulation, debars the COC to discuss about it. Now, at a tricky situation for that particular case, anyway, they will pass a resolution and go to the adjudication. So, except for this particular clarification, in majority of the cases, all the COCs are happening. They are running the COCs, because otherwise you can't manage it all. The RP also is not empowered to take decisions when the COC is constituted. So currently it is going. Now it's more of a clarification. But technical issue, if the plan related matter is required, it is certainly debarred. So that in that case, they have to approach the NCLT. That's what my views on that.
Himanshu sir, your views, sir?
So it is basically the amendment is very self-explanatory that the COC, if whenever it requires, one can call it if it is required majority is there, and if they are calling the meeting. But yes, if it is pertinent to affecting any resolution plan which has already been submitted, that is not allowed. Other than that, it is allowed. So it is basically to have administrative issues, you can call the COC meeting.
So I think most of the RPs, what they were doing after Rainbow, they were calling COC, rearranging the distribution plan and then filing the application. Now this particular clarification actually now comes in their way. So you cannot amend or modify the plan until you take permission from NCLT. So probably now all will have to go to NCLT to take those approvals. Now another important aspect in an amendment is copy of PUF application, or we say avoidable transaction applications, will have to be served to the RA. Now regulation has been amended where they say that where the RP makes a determination under sub-regulation 2, he shall apply to adjudicating authority for appropriate relief on or before 130th day. So the time period has been reduced, but that is not very much material. Material is the RP shall forward a copy of the application to the prospective RA to enable him to consider the same while submitting the resolution plan within the time initially stipulated. Now, here I think somewhere we are being pointed out to share these avoidance transaction application to the RA so that RA can take a call. Now, here our view could be possibly one situation where the applications will have to be continued by the RA and he is paying an X amount. But the other situation could be the COC is not giving these transaction application and they are keeping their right with them to continue these application and get the amount directly. Now there could be two situations. So what they are trying to say is, my understanding is now PUF transaction application will also be negotiated. So now we have another negotiation or another bucket of negotiation with RA. So COC will now ask you to get the PUF transactions, file an application, and then let's negotiate it with the RA. I don't know what will happen in the cases where there is an MSME, there is a 29-day relaxation, still PUF transactions are there, application is filed, and they are accepting the plan of the promoters. Because I have seen such cases where in MSME, promoters are taking over and the PUF transaction applications are being continued by the COC. So in those type of situation, I don't know how this would be negotiated. Sir, your views, please.
This PUF transaction, see, wherever in 130 days, if you are able to file and if the RA is able to consider in his plan, is somewhat reasonable, something you can negotiate and solve it. But wherever there are books of accounts are not completely available or the forensic auditor or somebody is appointed, because of those matter pending issue, the pub transaction related matters are not finalized. Where those matters get finalized at the stage after the resolution plans are received. So it may call for again ask them to revise the plan. Those issues again will be added headed to the resolution professional. In resolving this through a plan will be a challenge in the case.
Another amendment is with regard to information memorandum. So information memorandum shall highlight now the key selling proposition and contain all relevant information which serves as a comprehensive document conveying significant information about the CD, including its operation, financial statements, to the prospective resolution applicant, and shall contain the following information. Now here there is an amendment where they have now included contingent liability in the definition of assets and liability. Thereafter, they have also added geographical coordinates of fixed assets. So here, why they have included contingent liabilities? Because there were arguments and allegations by the resolution applicant in number of matters that all contingent liabilities have not been disclosed, or some litigations which are pending and which might require some outflow of the financial from corporate debtor even after the takeover. So probably this is a clarificatory amendment, because my view is that contingent liability were always required to be disclosed. There could not be an interpretation that they were not included. So probably this is a clarificatory amendment. But second amendment is very welcome amendment, where they are saying geographical coordinates of fixed assets, because this was something which was a bone of contention. Most of the properties which after taking over RA were alleging was with regard to the assets where the geographical location was not clear, or probably the custody was not taken. So even if suppose custody is not taken, but the coordinates are given, probably this is going to be a very welcome step for the RA. Your views, Himanshu sir?
I 100% agree with you, because many times the contingent liability and geographical coordinates is very much essential. Many times if you miss the contingent liability, the entire plan may become unviable or, unpopular, or it is really coming heavy on the resolution applicant. So, and a lot of litigations are there based on the contingent liability. And because earlier it was not mandatory to inform, sometimes it missed out or something, then it becomes a real challenge. So this is the very categorically mentioned that now it is mandatorily required to be disclosed. So it is a welcome suggestion.
Now the another clauses which have been inserted are company overview, including snapshot of business performance, key contracts, key investment highlights, and other factors which bring out the value as a going concern over and above the assets of the CD. Now this is very important. Here they are saying basically we have become the chief marketing officer of the corporate debtor. They are saying you are basically going to project your company as if normally this language was used in the prospectus. And we know once there is a false statement in the prospectus, it has civil liability as well as criminal liability. I don't know what will come on the RP, but now he will have to sell the corporate debtor. And they have given some findings like brought forward losses in the income tax return, input credit of GST, key employees, key customers, supply chain linkages, utility connection, and other pre-existing facilities. Second is details of business evaluation, industry overview, key growth drivers in case of CD having book value more than 100 crores as per the last available financial statement. Now here I think, and Sureshji would agree with me, that carry forward of loss is always an asset which normally was not being recorded in the information memorandum. And it was something only a chartered accountant would say, sir, no problem, even if it is a shell company, let's buy it, because we are going to get a huge amount of loss asset. We will be able to set it off from the profits we are making. But tax is always something which when you bury it, it again erupts. And that's called the popping hydra, which Supreme Court says in one of the orders that it's an popping hydra and we should cut its head. Now, I don't know how brought forward losses can be projected under IM, and tomorrow suppose income tax department after taking over by RA denies the losses, maybe on XYZ grounds, we don't know, because those assessments and everything would happen. Second is with regard to input credit of GST. Still, there is no clarity by the department on how the tax credits would flow to the RA. And if there are some losses or lapses, whether that could be set off from the input tax credit or not, because that is again a debate topic for, let's say, two hours or so with regard to GST and income tax. So that is my view. Sir, your views, please.
Actually, really speaking, these are all the ideally when you are making an investment memorandum during your PE fundraising and all, many of these things are already a part of the IM book. But so far, the IP insolvency professionals are making IM as a very, very customary requirement of what is stated in the law. They make very, very customary thing. But really speaking, when the resolution applicants are doing their due diligence, almost all these details they follow with the RP, they get these details, they do the due diligence, all these data analysis they carry out. Now today it was made in the law itself very clearly, to the best extent possible, they brought all the wordings in the law that RP, and they have given time also to prepare this IM. Earlier it was very shorter time. Now they have given adequate time for the RP to prepare this entire IM comprising all these details, so that any resolution applicant who comes, who can do a due diligence at a faster pace. See, the resolution plan they have to submit within 30 days time. When they wanted to do, when they ask for all these details, it takes so much time. They appoint commercial, financial, legal people to carry out the due diligence. So to speed up the plan preparation, they wanted the IM to be comprehensive enough for any resolution applicant to act faster and better. All these are happening at a rapid pace during the 30 days timeline, where RPC must to support the resolution applicant to do the due diligence. Because these things are now mandated under the information memorandum, and they are given 95 days time to prepare all those things. The welcome change that all the RPs will compulsorily have to analyze each of these aspects and bring it in the IM itself. Otherwise, somebody will challenge it later. You are not given this in the IM, which is mandated. So, I mean, at least logically, it will be a thought through, and they are given the requisite time also, because by the time you would have been able to collect the details from the creditors, whoever you would have asked for, you would have given them the time to collect. So it is a must-do requirement for any RP to make a sensible IM for any resolution applicant to act faster on it, because the time is given them are very short. This is where the RP can value add for bringing a correct resolution applicant the resolution plan. So this means a welcome change in my opinion, and this casts a lot of responsibility on the RP to create a comprehensive document. Yes, we are prepared to do it as IPs in the expectation of getting a good resolution applicant and the plan for that.
So we have another regulation, because I think time is very short with us. So I will just flip through. So other regulation is with regard to giving resolution plan when suppose a resolution plan is not coming for a CD. So the idea is that issue request for resolution plan for sale of one or more assets of the CD. So I think this is more applicable or inspired from the real estate companies, where there are multiple real estate projects, and probably some of the projects would be easily sold and the company as a whole may not be easily sold. So this is something which is an important amendment, wherein they are permitting that you can club some assets and sell them if the plan is not received for the complete corporate debtor. Now here, though, I have 2-3 issues that if the resolution plan is coming, how a particular asset can be targeted, because then the liability issue will come. how the allocation of liabilities would be there. When the resolution plan is coming for a particular asset, that means only asset and not liability. So again, those issues would come, but I think this will again improve over the time period. But this is a welcome move where the non-core assets could be sold and core assets could be continued, or sometimes a good asset could be sold and that money could be utilized for running the show further. Now, another important regulation which has come is with regard to strategy for marketing of the assets. So this is only applicable in big cases where more than 100 crore assets are there. There requires to be a sales strategy, and that strategy again would only be prepared by the RP. Maybe some help would be taken, but then for the cost for the implementation, it will again have to go to the COC. So basically, COC would again be the boss to decide how a strategy for marketing of assets would proceed. This I have already taken. When more than one assets we have to do, there would be some issue with regard to allocation of common resources. Then another important and welcome step is with regard to amendment in assessment of compromise or arrangement. What they have done is, while deciding to liquidate the corporate debtor, because normally what was done, if resolution plan does not succeed, then there was 39 ABC who would contribute the cost, whether it would be going concern or not. Now they have said that while deciding to liquidate, committee shall examine whether to explore compromise or arrangement, and the RP shall submit the committee recommendation to the NCLT while filing the application itself. And where a recommendation has been made, the RP and the committee will not sit idle. So the point is, when even if there is a liquidation, they will keep on exploring the possibility of compromise or arrangement, even if the NCLT application is pending. We have seen the cases where liquidation application keep on languishing for a year or maybe 2 years because of the opposition of sometime promoters, some claimants. This gives a new lease of life where they say that compromise or arrangement can still be explored and worked out. Now, another this 40D regulation has been inserted, wherein they say that liquidation of corporate debtor, while they are being considered, it will also not limited to this, but it will include non-operational status of preceding 3 years, whatever the goods produced, services offered, technology employed, whether they are obsolete or not, absence of any assets or intangible assets. Some of the things like we have seen carry forward of loss is there, brand value is there, intellectual property is there. So all these issues will have to be minutized in the COC meeting so that same is carried forward in the application to NCLT. Now, I think this is somewhat motivated because of the judicial intervention. Why do you want to liquidate? So basically, it should not be a mechanical resolution of liquidation. Some application of mind will have to be shown, and these are only an indicative feature of what probably the reasons could be for liquidating the company. So I think, sir, we have been able to cover the liquidation regulations in toto, the amendments, but I think we cannot go forward with the liquidation regulation as of now. CIRP is completed, but liquidation we will have to keep it pending because the time has already
Yes, we will
crossed the
continue
limit.
in some another sessions. We will continue.
So I
Others.
think if we can take some queries of the participants and then we can conclude. So Rishabh,
I will give my concluding remark for a minute whenever you suggest.
Yes, so there is one question from one of the participants. In many cases, the creditors mentioned in the books of accounts may be dummy. The transactions without the same are audited and without any supporting documents.
Sureshji, would you like to take it?
Yeah, see, in those cases, so certainly, if information is not available in the system, the common public announcement is the only proviso what we provided. That is the only basis. It goes for, and when the transaction goes for PUFE thing, those transactions will automatically get reported as a fraudulent dummy entries and fraudulent things, and that will get attracted. So if the information is not available, what the IRP can do? He cannot communicate to them. That's it.
Second question is, if the claim is provided in the books of accounts, it is acknowledgement of debt. It's just
Correct. Claim is provided in the books of account. When the claim comes up, we will verify with the books of account and the claimant's proof of claim, whatever is submit, if both the things are matching, then IRP will admit the claim.
Yes. Okay. So Himanshu sir, you can make conclusion remarks.
So, sir, what we have seen that we have already completed 5 years of our insolvency code. We are entering into 6th year, but still the code is still revolving. Actually, it's really a more than reasonable time. Code should have been settled, but we see that is still revolving. So, I am always worrying. I'll give you one small example. When you sharpen the pencil, we should not sharpen to that extent that it will break and you have to redo again. We are almost reaching to that conclusion that whatever we have, mentioned, we have settled now. It is, many decisions we are taking, we are getting it almost reversing the earlier practice of 360-degree changes. So I think it is all the stakeholders must ensure that such a wonderful code should be, should be a grand success. We need to observe a lot of accuracy while drafting, and our judiciary as well as all the stakeholders must take care about it. We need to ensure that proper justice should be delivered to all the stakeholders. This is my concluding remark.
Absolutely. Thank you so much, Himanshu sir. I would like to, as we come to the close of this webinar, I'd like to express my gratitude to all the participants who have patiently heard this webinar and made it a success. I extend my gratitude to Nipun sir, Mahalingam Suresh Kumar sir, Himanshu Kapadia sir, and for gracing this, giving the practical aspects in the amendments and explaining them so well. You've all spared time out of your busy schedules and helped all of us understand the amendments so well. So thank you for that. And special thanks to Kranti Kumar sir, President of HYPA, and Kalpana ma'am, the Secretary of HYPA, as well as Sunit Shah sir, the Managing Director of Skies and Company, for co-organizing this webinar. Thank you so much. We'll have a follow-up session with the permission of the speaker and the panelists, so that we can understand the other amendments as well in great detail. Thank you so much, everyone. Thank you.
Sure. Thank you.
Thank you so much.
Thank you, Nipunji.
It's always a pleasure hearing you, Nipun sir. We cannot stop hearing you when it comes to you, at least.
So energetic and very proactive, sir. Thank you.
Thank you so much.
Thank you so much. Thank you, everyone. Thank you,
For
everyone.
all the love and kindness.